Test, test, test. There we go. Hey, everybody. Good morning, good morning. I know a lot of you guys are most likely asleep over here, especially all of you guys on the West Coast. But for those of you guys on the East Coast, thanks for watching, everybody. So in my ear, I got everything associated with CNBC, Fox Business kind of rolling on my ears here. But Bitcoin's on the verge of a breakout. So I think it's worth talking about what happens if CPI is cooler, what happens if it's a little bit more hotter, and which way we could possibly go here, everybody. At this point, everybody in the world is going to be watching inflation data because this is really going to determine how the Fed is going to respond over the next few weeks. Loki's over here saying hi. But I do think it's going to be crucial, everybody, that we find out. Oops, let me make a move over here. If I can do this, there you go. How bad inflation is going to be. And sorry, guys, Loki's over here trying to get a free treat or something, and he'll get a treat in a little bit over there. There we go. All right, let me turn this off, though. There we go. So at this point, guys, you can see that Bitcoin's hovering around the $25,000 mark. We're going to try to force a breakout here probably over the next half an hour or so. And hey, GT, good morning, good morning. I forget most of us are all asleep. But we're on the verge of trying to break out above this like $25,000 level again. If you guys have been looking at the 15-minute chart, you guys can see over the last, let's call it 45 minutes or so, we've started a little bit more of an acceleration here, and we're trying to break above and make this new high relative to above $25,000 here. Now, as far as I'm concerned, I'm not trading this at all. The technicals are still screaming buy, 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 though. But again, even if the technicals are screaming buy, is when CPI data comes out in about 28 minutes, you're most likely going to see some really strong moves pushing us up through a breakout or a little bit further down, okay? One thing I do want to draw you guys' attention to right here. Let's see. Wait a second. Okay, never mind. Just make sure there's some breaking news, but it's just kind of talking news. You guys can see that crypto really isn't doing anything too fantastic, though, even though Bitcoin is. So I do want you guys to understand Bitcoin's moving up, but like ApeCoin is still down 3%. Spell token still kind of going sideways. GTC is still going sideways here. Bitcoin is one of the few things that actually made a big rally up to those relative highs. Like, everything else is still not at those levels we were just at. Maybe you can see maybe over here a little bit. STMX, not close. Linked, not there. XRP, nothing looks like it wants to break out except for Bitcoin, which is a little bit concerning to me. Dogecoin looks like on the 4-hour chart it wants to have another golden cross. This one could definitely move up a little bit higher. Matic is still down about 3% today. This is 4-hour charts, everybody. So you're seeing Bitcoin very excited, but for everything else, you're seeing a lot of things on the verge of breakdowns here, which is not necessarily what we want to see, I would say. The only other thing that managed to get back up here is Ethereum, and Ethereum, Bitcoin are like that, as you guys know. But I'm still a little concerned that altcoins don't really want to chase Bitcoin right now. That is something I'm not really used to seeing. The stable coins are for the most part back to being stable. They're back to being pegged around $1. That's finally good. The only one that's still having a little bit of issues here is USDD, the decentralized dollar. I'm hoping we can see some strength here over the next few hours, okay? Now, I know most of you guys are probably asleep, or most of you guys, this isn't the nighttime crowd, but I do want to talk to you guys about some of the inflation data that we're going to be looking at and how this could possibly affect Bitcoin's price. So right now on the 50-minute chart, we're still hovering. We have about 26 minutes left. But we're going to go through some data here just so you guys can see where we're at kind of in this trend, because if you guys have been watching anything about the banks over the past few weeks or past week or so, you guys know that the Fed wants a very low inflation point. I think the consensus right now is around 6%, 6.1%. If we're lower than that, you're most likely going to see the Federal Reserve take a pause on rate hikes, or maybe just do 25. I would say maybe a pause. I don't really know about how if they really want to do a pause or not. However, if it's very, very hot, you're going to see them be forced to do a 25 basis point rate hike. You're going to see the dollar probably do a soaring move here. Let's check out the dollar very fast. Let's go to the daily chart here. Let's open this up and shrink this down just a little bit more here. There you go. All right. So we've been following the dollar for the past, I don't know, a few quarters now at least. You can see with this bad news coming from the banks, the dollar flat out just crashed over a period of 3-4 days. Especially when we were trying to reach new highs, the dollar was getting very strong. With this banking crisis going on, the dollar has really plummeted back down there for a couple of different reasons here. Part of the side effects of this new banking craze, and hey, our anarchist, welcome, my man. Oh, you got a fancy little title, don't you, right there? Hey, little boy, happy to see you back as well. One of the things that happened here with this banking crisis is, or before the banking crisis, excuse me, the dollar was actually getting stronger and stronger because people thought, as after the really hawkish talk from the Federal Reserve Chairman Jerome Powell over those Fed meeting, not Fed meeting, the meeting we had in front of the Senate and the meeting he had in front of the House. He was very, very hawkish. So everybody was pricing in a 50 basis point rate hike. So you can see how the market was moving it up and up and up, stronger dollar. Because people are trying to price in a 25 basis point rate hike now, or maybe no hike. And I think somebody even said a rate cut, which I don't think is going to happen. A rate cut would be ludicrous. I do think what's about to happen here is if we have a strong inflation report, which means very, very hot, you're most likely going to see the dollar spike back up here, probably really robustly, close to 105. However, if you do see that inflation has been a little bit lower, it's actually doing very well. We're coming back down to, what would that level be for us? I mean, like 5.9, 5.8. If you get something around there, I think you would see the dollar continue to move back down, probably heading back down to around $102.61. And apologies, guys, I have had no sleep since last night or yesterday. I tried to stay up, but I had to do some meetings for some sponsorship stuff coming up with Fair Desk, as I told you guys last night. So we're kind of on the precipice here. If we start breaking down below the 50-day moving average here, this is definitely going to be a good sign for stocks. A good sign for crypto, but that they're trying to figure out what Jerome Powell's going to do. But that most likely means that inflation is going to be going up. So let's look at some charts here very fast. Let me put Bitcoin back on here because Bitcoin's up almost like 3% right now. It's trying to make a move. So this is the CPI rate over the past few years. You guys can still see we're relatively high. It's not a good spot. If we go over to last year, we're high. It doesn't look as high in this one because we're starting off at 6.4. But guys, we are still very high. We only dropped from 6.5 to 6.4. That was a big slowdown. We want to see this thing chugging down towards 2% as fast as possible if you want to see the economy try to get back on track here, because the longer this is up here, the longer the rates are going to be higher, the more likely we're going to be going into a recession, okay? Inflation slowing down a little bit, but at least coming down, right? But it's getting sticky. Now, PPI, which comes out on Wednesday, this has also been coming back down. This is a little bit nicer. But I wanted to remind you guys exactly what this stuff is. So since I paid that $20 for ChatGPT and I haven't been using it as much as I need to, I wanted to break down exactly what some of this stuff is, okay? So the CPI stands for Consumer Price Index. It's a measure of inflation that tracks the changes in the price of goods and services at the retail level, the prices that consumers pay when they buy things like groceries, rent, or healthcare services. I'm not going to go through the details, but that's basically what CPI is. Now, as we look at PPI data coming out on Wednesday, the PPI data stands for Producer Price Index. It's a measure of inflation that tracks changes in the prices of goods and services at the wholesale level before they are sold to consumer. I've worked in this type of field myself, so imagine when you buying like people are buying pallets and stuff. These are those types of prices. Okay, these have been going down as well. That's been really good. And in fact, if we kind of go over here to the yearly chart, you see something funny. This is actually falling down faster than your regular inflation, and what you're seeing a little bit of is the price is falling down for like the Walmarts, the Costco's, the Safeways, the Albertsons, whatever your guys' local stores, but they're not necessarily passing those savings on to the consumer. They're actually just keeping them as is so they can increase their margins a little bit, because you guys know that we're kind of heading towards an earnings recession as well. Now, the one thing that is going to make you guys very depressed out here in the States is that we're going to be looking at rent inflation. Everything's been going down except for rent for the most part. Rent inflation is like the saddest thing I've ever seen. Ever since like COVID happened, we've just been on a roller coaster here. Go to last year, we've gone from 5 to 5.14, up to 6.23, 7. Now we're almost like at 8% year over year rent inflation. I'm not entirely sure if we cool off a little bit or something, but this is something that's going to really cause some pain here as far as we talk about inflation. I told you guys how they were trying to skew some of the numbers on the CPI by taking away a little bit of the rent inflation and putting a little bit more housing inflation in there as well to kind of lower the numbers. So we'll see if that has an impact, but inflation is still going up sky high as far as rent inflation. I mean, I could tell you the definition of it, but I think you guys understand what it is. Imagine you live in a house or an apartment, but you don't have enough money to buy your own, so you decide to rent a place to live instead. When you rent a place to live, you have to pay the owner of the property a certain amount of money each month. That's called rent. Ooh. Now let's say more and more people want to rent places to live, but there aren't enough places available for everyone. When this happens, the people who own the properties can charge more money for rent because they know that people really want a place to live and are willing to pay more. Really want a place to live. And if you don't have that, you end up, I guess what, Seattle, San Francisco, Portland, you get what we call a lot of that homelessness we got over here. And then after that, services inflation. Actually, I should read you the definitions of services inflation because over the next 20 minutes, when we actually hear them talk about the inflation data from CNBC, and I have CNBC ready to go right there, okay, ready to go. They're going to talk about services inflation because this has one of the things that's been forcing inflation to be sticky. All right, so services inflation right here. I even said explain services inflation like I'm a child because I wanted you guys to understand this. Imagine you have some money that you like to buy things with, such as toys or candy. Now imagine the price of these things starts to go up, so you need more money to buy the same things you used to buy before. Inflation. The same thing can happen with services, like going to the doctor or getting your hair cut. When the cost of providing these services goes up, the people who provide them may charge more money to cover their expenses. This means that you may need to spend more money to get the same service you used to get before. This is what we call services inflation. When the price of services goes up over time, just like with the toys and candy example, this means that you may need more money to buy the same things you used to buy before. A year ago, my haircuts cost me $50 every 2 weeks. Now they cost me $70 every 2 weeks. That's services inflation right there, okay? Back when COVID was going on, they were desperate to find people to come do their hair as the market got more and more robust, as property values kept on going up, taxes kept on going up. They were forced to pay more, and that led to what you would probably see as the services inflation, okay? Now, on the yearly chart, though, I mean, guys, we're humming along still. Not as aggressive as rent inflation, but services inflation is still going up at a drastic pace, and we're not really seeing the inflation drops that we want to see from services. I think you guys can see that when service inflation finally decides to start going down consistently for like 2-3 months, I think that's when you can be sure that the inflation is coming to an end as far as us potentially having some type of reversal spot where we might be looking at a higher level. All right. The next one is energy inflation. We actually started to come down quite a bit after the crazy times we had last year. But you guys can see that we've suddenly started to have a little bit more of a spike back up. That's primarily because if you guys remember, the administration was manipulating our oil markets by releasing the petroleum reserves that we have. I think I showed you guys the chart here on this one before. Uh, Emergency reserve oil chart. There we go. Oh, not stocks. Oh yeah, there it goes. Yeah. Um, let's go to 3 year. Yeah, you can see how we manipulated the market by just dumping tons of oil in there. We stopped. And see how it's been going flat since January? We stopped. Now oil prices are going to fluctuate a little bit more here. And even though the price of oil has been going down a lot over the past few days out of this banking panic, that doesn't mean the price of gas is going to change off of that, primarily because we still don't have the same capacity we need to have for as far as refineries are concerned because um, come on, frankly, oil companies don't want to invest in new oil at this point. Not too much because even I think in President Biden's State of the Union address, he said that he wants oil for like the next 10 years or something like that, which like probably threw them for a loop. And then yeah, so worse, if energy prices continue to go up here, that's probably going to be one of the things that makes this CPI report a little bit more sticky than we want to admit. Okay, now Bitcoin going up, fine. Altcoins not really going up here, guys. I mean, UFO coins up a teeny bit. FTM's up doing okay. FTM's actually following Bitcoin pretty precisely. But a lot of other stuff, Ethereum Classic, right? Still coming back down here a little bit more, down 1%. Litecoin still down, actually holding it fairly well. Not as high as it was just a while ago, that's for sure. But at least it's trying at this point, right? So a lot of stuff has managed to come back up, but just like how Bitcoin's been very boring over the last like 15 hours or so, Everything else has been fairly boring as well. But I have CNBC over here ready to go. We have about 15 minutes left, and it looks like they have a commercial on right now. But basically, once they're good to go, I will turn up the volume and I'll shut up as we hear Rix and Telly start to tell us what's going on, okay? And Halo Boy, no worries, you're doing great. I know, guys. I normally don't like streaming in the morning because nobody likes to talk in the morning because we're all very tired. But I only stream in the morning for these particular types of events, right? I also, since I didn't have anything to eat this morning yet or drink, I made some nice tea in the French press. I made some type of black tea with roses in it or something like that. You guys know how much I waste my money on tea, nice fancy tea, but this tea is very highly caffeinated. And once this is all over, I'm gonna pass out. But at least I can survive this stream with you guys. Oh, and as far as that Fair Disc deal that we had been talking about over the past few days, so I think I reached a deal with them to give you guys a level 1 VIP access, which means you guys are going to have lower trading fees, and they're going to let me be a copy trader for them. After that, I will give you a link. I think I'll have the link ready to go on Thursday, and so I'll probably start copy trading if I can sometime this weekend, if not Monday, depending on how busy I am because I've taken my mom to dialysis. But after that, we should be good to go as far as Fair Disc is concerned. And I'm reaching out right now for those of you guys like options, especially you members out there. I'm reaching out to Tasty Trade, and I'm going to see if I can start to do reviews and tutorials on their options platform. That way you guys can make some good options plays, and I might try to use it so you guys can see what's going on. Because I like the mobile format a little bit more than TD Ameritrade, and I like TD Ameritrade. You guys know I like TD Ameritrade, but I think Tasty Trade would probably be a good fit for me as far as having you guys have more educational content. Because TD Ameritrade's educational content, you guys know, can be a little a little old school dry sometimes. And hey, Medi, hey, Dave Paradigm. Hope you guys are both doing well. Hi, how will today's news affect Euro to USD? So think about it like this. So we can kind of look at some pairs here as far as the Forex markets. Let's go over to my watch list and let's go over here to Euro USD. Okay, let's go to the weekly chart just so you guys can see in context what's been happening. So right now the Euro has been gaining against the dollar because the dollar, as you guys can see, has been going down. All right. So if you want to see the euro go up today, you want to see inflation be very cold. You want to see inflation be well under 6%, under 6.1%, and you're going to see the euro probably pop up to maybe 109, maybe in the short term here since this is the weekly chart, maybe 108 or something, somewhere around that lane if you guys want to see the euro go up. If you want to see the euro come down, you're going to want to see hot inflation because that means that America is going to have to do another interest rate hike on the 22nd here. The meeting starts on the 21st, but the big announcement is going to happen on the 22nd here. And at this point, I mean, there's so much wild speculation based off of all the carnage that's been happening with the banks. First, we had Silvergate, then we had Silicon Valley, and then we had Signature Bank. And I think that banks are actually doing very well today in the pre-market hours. But that's most likely just because they crashed like 80%. Somebody wants to buy them and make a quick profit. But basically, if you want to see the euro gain steam against the dollar, you want a weaker dollar, you want to see inflation be very cold here in the United States. So the expectation here is, if I go down here, zoom in just a little bit for you guys. You guys can see that? Yeah, there you go. So consensus right now is about 6.1%. All right. We want this, if you guys want this to be like 5.9, 5.8, right? You guys want very cool inflation because that means we probably won't cut rates, and that means the dollar get weaker here. If you guys want to see the dollar gain strength against the euro or the pound or anything like that, you guys are going to want inflation to be really hot. So like 6.4 or 6.5, that'll get the dollar soaring because everybody's forecasting that that would mean that the dollar's going to get stronger here. Now, one thing that's going through my head right now, if I can remember exactly what it's called. I don't know if I've actually looked at it before. There you go. This might do the trick. Okay. Daily. This might work. Well, I don't think this is the one I'm really looking for here, but it's fine. Right now, the Fed funds rate's around 4.57. We haven't been over here since like before COVID. We're probably going to have to get back up here just a little bit higher, and I wish I could just squeeze this in here. Probably back up here, which is another 2 to 3 basis point rate hikes. That's kind of where I think Jerome Powell wants to finish us off here. If for whatever reason inflation starts to go back up, something really bad is happening, then all of a sudden we might have to go back up to 5.5 to maybe 5.75, maybe as high as 6. But that's going to be a while longer. Going back over to this one chart here, historically, we're usually not going too crazy here. The last time we got like really crazy hikes was back in the 80s. Let's kind of go from the 90s onwards, I guess. Right? In 2008, before we had our financial crash, we were at 5.25. That's kind of where we're aiming right now. And you can see how fast we gained right here. We're going even faster than this. That's why we're seeing the banks kind of buckle. We're not used to going this fast. We're burning through rate hikes, right? I do wonder though. Like the big issue right now, guys, to be frank, is we all know that inflation is a really big deal. Inflation is like killing lots of people out there. It's making it very hard to afford really basic stuff. I bought my first box of cereal in like 2 years, and it was like $9 for a basic box of cereal, like family size, but a box of cereal. I was very surprised by it. I'm not surprised as much as just like damn. But what's going on right now? If I can, let me drag this. Oh, I just have to refresh. That's fine. What Jerome Powell doesn't want to have to do here is what Volcker did back in the 80s, which is what Jerome Powell, he does not want to be known as a Volcker. Like there's a whole adjective to describe what happened here. He cut rates too early. We had a spike of inflation, and he had to raise them right back again. That's what he doesn't want to have to do. Look, he dipped them again, then he had to raise them again. All right, and this we're talking about like 19. We're only at 4 right now, 4.5, 4.75. This guy was all the way up here at 19 for the rates. Okay, we're not going to get anywhere close to that because our inflation isn't that crazy compared to what we have here. But he doesn't want to face this situation right here, where everybody thinks that inflation is over, and then boom, inflation starts to spike again. Then he has to raise rates again, and you saw what happened. This is 1980. We had a recession. 1981, we had another recession. So just imagine 2 big recessions just like that. Nobody wants to see that happen. I think when you hear a lot of people these days, you guys know I go to a lot of crypto events or venture fund events. Heck, I go to the venture capital events of Silicon Valley Bank. I guess no more. Sucks. They gave out tons of free food and beer. But when it comes to that, like everywhere I go these days, and I'm talking to fintech people or finance people, there's always, like, I would say not a majority, but 25% of the people who are always talking about the Great Reset. And I think the Great Reset means different things to different people. I wonder if I actually typed it in ChatGPT, and we have 7 minutes left until data comes out. But what is the Great Reset? Let me see what actually ChatGPT says about it. See various waves by different groups of individuals. Okay, that's cool. Depending on the context which you use. One popular interpretation of the Great Reset comes from the World Economic Forum, which is an international organization that brings together political and business leaders to discuss the global issues. The Great Reset refers to an idea that the COVID-19 pandemic presents an opportunity to rethink and reshape the global economy and society. Okay, that's not it. Yeah, here it is. However, some people have used the term the Great Reset to promote conspiracy theories, suggesting that it's part of a secretive plot by global elites to establish a new world order or to take away people's freedoms. All right. Now, neither one of these is really the one I hear on the street. The one I hear on the street is kind of like a little bit of conspiracy, like the tinfoil hat that I kind of wear every now and again. But it's more of the fact that, hey, the economy is going to get so bad that you guys need to have some type of plan B, otherwise you may be kind of screwed in the short term, if that makes sense, right? And there's a better way to explain this, but you guys understand. Something like a really impactful event is going to happen, and if you're not on the right side of it, you could lose a bunch of money. On the other hand, there's an opportunity to make a lot of money. And I think I've heard it most from the Bitcoin maximalists that say they're not buying anything or holding anything besides Bitcoin. I know a lot of Bitcoin maximalist guys, and I mean, they're usually the richest people in the room, but gosh darn, they love Bitcoin a little bit too much. I need some Ethereum, I need some Dogecoin, I need some Matic, I need something else for myself. Um, and hey, no worries, Dr. Quaba. I appreciate it. Quabina, sorry, I just totally messed up your name. um, why do I think Elon hasn't accepted crypto for Twitter yet? I don't think at this point, as far as Elon is concerned with Twitter, I think he's just focusing on making the app as profitable as he can right now, and I think that's on the back burner. I think that's more of something that he probably, if he has anybody working on it at all, it's maybe like one or two developers. It's not going to really be even a full team. I don't think that's his priority. Remember, he drastically overpaid for Twitter, drastically overpaid. This guy wants to turn this into a profitable company, and he's trying to do it in a time when ad revenue continues to go down because the economy continues to get worse. So his whole mindset is fixing the revenue problem, which is why I think he fired like 60% of the staff. He's forcing the rest of the staff to actually work normal hours. Remember, most of the tech people these days, especially the Twitter culture, was you're not really working 9 to 5. Like when I was a marketing director, I worked from like 8 to 7, and I was just working the entire time, grinding and grinding away. A lot of the tech jobs nowadays, you get like free coffee and stuff. You get to have like a little like video game room, like a whole bunch of chill stuff. But that's all time when you're not working, right? So I think he's just focused on fixing the culture, his fixes, I guess, is his perceived fixes for the culture, and then to try to make it as profitable as possible. I think he will go down the crypto road down the road, but I think he's trying to find the best vehicle to do so. And on top of that, remember, he owns Vine now. Twitter owns Vine. He's going to try to fit that short form content to there as well. So he's probably going to try to do short form content. And as far as crypto, he'll probably try to insert that into the banking thing he's been working on. Remember, he's trying to work with the banking system in there. It'll just be a part of the banking system. I don't think he's going to advertise it as something so crazy crypto because I think he's afraid of potential regulations that come down the line. Remember, he doesn't know what regulations are going to be put on the banking institutions of what they can and cannot do with crypto. Why would he start wasting money on that now when he doesn't know? All right, so it's more of just not so much like it's common sense, but it's like a practical thing. Well, hey, he doesn't know what's going to be happening in the future. He doesn't know how the economy is going to be in a few months. It's better just to put that on the burner and make sure that Twitter is making as much money as possible so he can pay his debtors off and keep Twitter alive for the next few years. And once the economy turns around, Twitter is going to be some type of crazy, amazing app. Like I would say 5 years from now, Twitter is going to look totally different than what it looks like now, like completely different. There'll probably be crypto wallets, stuff like that. Lots of cool stuff out there, but for now, he needs to just focus on making it work. Remember, he made a very bad deal, very overpaid by it a lot. But by buying it, I mean, he really did. He got a lot of value out of it, and he'll turn it into a very profitable thing. But it's going to take some time, I would assume, unless it's already profitable. But again, it's a private company now. We don't get to have those earnings reports like we once did. And I'm sorry, guys. We got 2 minutes left. I'm watching CNBC in a second. And hey, Puma, happy to see you back. Damn, you up this early? Do you ever sleep? No, I did not get any sleep last night, Ken. No sleep whatsoever. After this stream, I will be crashing and going to bed. And I'll be nice. Oh, but now I have some fresh tea for myself. And I'm watching CNBC over here, everybody. I just don't want to play the commercial. Like, once they come back, I'll be there. The Dow's implied open, though, is around 200 points. That's kind of nice. So, like, everybody's perceiving this to be a cooler inflation point if the Dow is up that much. Or people are perceiving that even if the inflation is hot, somehow Jerome Powell is not going to raise rates. And I just don't see that happening. He's been talking for years, like over a year now, saying, like, pretty much if there's a choice between saving the economy and fighting inflation, he's going to fight inflation, and the economy can come secondary to that. Which is why you're starting to hear politicians say, "Hey, why are you trying to kill jobs? Why are you trying to cause unemployment to go up? Why are you going to try to cause people to lose their financial security?" Right? He keeps on saying the same stuff, but people don't believe him. The banks didn't believe him, which is why they kept on buying long-term bonds, even though short-term securities were skyrocketing, right? So the T-bills and stuff like that, all skyrocketing, and that's because the banks didn't believe him. They didn't believe him. They thought he was going to blink. We've been talking about this like for months now, quarters, like whole quarters. Who's going to blink first? Jerome Powell didn't blink. At this point, we don't know if he is going to blink, but so far, the banking system is breaking before Jerome Powell is blinking. And that's an insane thing to have to realize, right? So let me go over here very fast. We're looking at the... come on. It's like we got like a minute left, so I'm thinking they're just like putting as many ads as they can right before the data comes out. Because Santelli's about to come out any minute, I would have to assume. And hey, Mr. Joker, happy to see you back. And no worries, Suborbars? Sorry if I can't pronounce your name right. Been saying, sorry guys, I'm like totally multitasking here. Been saying no chance of stopping. The optimism means nothing until something breaks. Exactly. Oh, there we go. We're seeing a little bit of a spike right now. I wonder if it came out or not. Well, and actually, we usually do have a little bit of a spike here beforehand. Let's look at the 1 second chart. We had a dip, then a rip. Okay, we're kind of going more sideways. Looks more optimistic at this point. So let me pull this up very fast. There we go. Mike, I do not want to see the commercial. These people have so many commercials. So I'm looking on my phone right now. We're about to see it on the screen here, but I just got a tweet from my phone. It says, U.S. inflation falls to 6%. That's about expectations. So which is why we're not necessarily seeing some type of crazy boom, but we're seeing something okay. Bitcoin's trying to break above the 25,000.
In our February read on the Consumer Price Index, headline number expected to be up 0.4, delivers exactly up 0.4. High watermark here was up 1.3 in June of 22, and that was the highest since 2005.
Broke above 25,000.
Strip out the all-important food and energy, up 0.5%. This is 1/10 hotter than we were looking for, and it's 1/10 hotter than the rear view mirror. High watermark here up 0.8 in April of 21. That went back to 1981. If we look at year-over-year numbers on headline, expecting up 6%, exactly 6%, and that is well off the 6.4 in the rear view mirror. High watermark 1981. In 1981, it was up 9.1, and that was a 40-year high. If we look at food and energy year over year, up 5.5 as expected, 1/10 lighter than the rear view mirror at 5.6. High watermark here at a percentage, 6.6. That was in September of 22. That went back to 1982. If you look at interest rates, they have moved a bit lower. You look at pre-opening Dow futures, they are going a bit higher. The only fly in the ointment here was the month over month being 1/10 hotter on core. But I think what most people were really paying attention to, Becky, was the year-over-year core at 5.5. That is indeed good news. When was the last time we had a 5.5? Let's go down the Wayback Machine. To find a smaller number would be November of 21. November of 21 to be smaller than 5.6. And
Dollar index is going down.
we know that that's a little bit hotter than we were expecting in the rearview mirror last time. So to get it down to 6%, that was the lightest, going all the way back to September of last year as well. Just by looking at the markets, this isn't going to move huge amounts in the interest rates because it's close to expectations. Definitely coming off. One could argue the same argument, maybe not coming off as fast, but I'm very impressed with the year-over-year numbers. Back to you, Becky.
All right, Rick, stay right there. We want to bring in the rest of our panel. Joe Lavorgna joins us on set. He's a former economic advisor in the Trump administration and national economic chief economist. He's now SMBC Nikko Securities America chief economist. Dana Peterson, who is chief economist with the Conference Board. Jason Trennert, who is Strategas Research Partners chairman and CEO, and Steve Leisman. And Steve, why don't you just walk me through, first of all, and tell me what this means from the Fed's perspective. Does this make it more likely, or at least take the pressure off them to raise at this next meeting next week? You think they'll have the ability to sit back and say, we're going to take a pause because inflation's not hotter than expected, and we are concerned about what's happening in the financial system?
Inflation is still so hot. It's not hot. It's still hot.
Roll back Rick Santelli's reporting on the prior two inflation reports, both of which were hotter than expected. And they're going to look and see a nice, calm Rick Santelli today when they see it, and they're going to say, well, at least it wasn't worse than expected. They have a lot of work to do here. They've still got an inflation problem, but I think they'll feel like they have at least some wiggle room in that it was not worse than expected. There's one thing I'm a little, I guess, concerned about here. We'll see what to do with that, but I want to double check my number here. I do see that used cars and trucks, the prices were actually down 2.8%, and there's no other way to follow this issue here than listen to Phil LeBeau, who says that number is rising. So I'm a little concerned that This number did not pick up what's really happening in the economy. Sometimes that happens with a lag with the CPI number. I also noticed, Becky, that your shelter costs.
Remember how I told you guys they're manipulating the prices a few days ago? This is the effect of that. It looks a little bit better than what it really is. He's even trying to say it, but between the lines.
It's about a third of the CPI, and it will hopefully come down, and that will be a big part of why the Fed can relax a little bit. I think this number, Becky, just to sum up, because it is not worse than expected, the Fed has the latitude or flexibility to pause if it feels it needs to because of the financial conditions.
All right, we'll come back to shelter in just a moment, but Joe, let's talk about what you think the Fed should do here.
They should definitely
This is
pause
interesting.
when you have a crisis like this, and you could just see based on market price action, how much the 2-year notes moved, biggest since '87, how much front-end spreads have moved, biggest since the Greek crisis. The Fed's either eased shortly thereafter, or they've paused. In this case, they could pause. They could stop the QT because the QT is draining the bank reserves at a 10, 11%
We're going
rate.
down now. Oh, shit.
Because right now what's happening is these smaller, medium-sized banks are scrambling for deposits. Wait, see how things evolve. You've got the new forecast. You can still highlight the fact they need to do more. The likely need to
Dollar
do
index
more,
is
but
going
just
up.
wait.
Something's weird
Go
is
5
happening
weeks,
here.
See what happens. You can reevaluate in May.
Dana, how about you?
I think there definitely is a possibility that the Fed will pause next week. This is a crisis in the banking sector, and certainly the Fed doesn't want to do anything to exacerbate it. But I think that even if the Fed does pause next week, they should send a very strong signal that it's not done, that there still needs to be further interest rate hikes to tackle inflation. Inflation is sticky, and it's not coming down as fast as what would be expected.
Jason, if that is what the Fed actually does, and Steve Leeson has been telling us that that could be what they do, that they could take a page from what we saw in Europe last time around, where they stopped and then came right back on with the Bank of England. If that's the message, as an investor, what do you do? As somebody who's actually putting money to work, is that a sign for risk on again?
Not for very long. I think I would view it as kind of the pause that refreshes, and I would use it as an opportunity to probably de-risk the portfolio, because I agree with the other guests, and I agree with Steve and Rick. I think that there's a decent chance they pause tomorrow, but we're a long way away from the Fed's target. And I also think the Fed is also, we have to remember, is playing a political game here because we're heading into an election year next year. And I don't think they want to have their fingerprints over another bank failure. So
Damn politics.
There's a lot of things that are coming into play here, and it seems to me that as an investor, you want to de-risk the portfolios because we are getting to the point at which the Fed tightenings are breaking things, as they always do. And it will be hard, it seems to me, to avoid a recession given the amount of tightening that's been in the system. But it probably, discretion is probably the better part of valor here for the Fed, and they should probably take a little bit of a breather.
Jace, when you say de-risk the portfolio, I assume you mean don't buy financials even at discounted prices? Is that the case? What else would you mean by that?
I think so. I also think that there's still a lot of there's still a lot of companies that are either profitless or trading at very high multiples that are inconsistent with a Fed funds rate of 4.75 and an inflation rate, frankly, at 6. And I would say what the Fed has done this week, or at least what the Fed and the FDIC have done, you'd have to say is at the margin an easing. It's not a tightening I mean, it's necessary, but it's somewhat inconsistent with fighting inflation over the longer term. And that means the Fed is probably going to have to be back at some point later in the year.
Mike Wilson has been raising some concerns about this. Look, people had been thinking maybe he got it wrong until we saw things start to shake up like this. But you've still got the S&P at 3855 is where it closed yesterday, below 4,000, but still sort of hanging in there. It sounds to me, Jason, like you're just kind of uncomfortable with stocks at these levels still.
Yeah, I mean, I think Becky, at 18 times earnings, again, it's really hard to square that with a 6% inflation rate, even though it might be closer to 4 towards the end of the year. Just historically, that's a very hard thing to make the case for. And generally speaking, Randy Quarles has talked about the idea.
Remember when I was talking to you guys about irrationality? There are people on Wall Street that agree with me, but we just don't hear from them all too much.
Economic dislocation.
Joe, let's go back to just how concerned you are about inflation right now, how sticky you think this is.
If you have a recession, I mean, Jason admitted it, that you have an index leading indicator shrinking 6% annualized. But by the way, before the last week's situation, 2-10 curve, record inversion, -110, -111. I mean, that was 2 days before. So the Fed is now tightening and taking liquidity out of the financial markets and the economy. I mean, this is like silliness. I mean, they're making just, I think this is just pure stupidity.
But you think
they
the
should
inversion,
the
inversion
if you
is
have
a good indicator of
it's a great indicator because not only predicts recessions, it causes recessions. That's why the banks are scrambling for funding. So if you have a recession,
right,
inflation is going to go down.
But Joe, I want to go back to, we were talking about this during the commercial break, whether you actually hold the Fed responsible for the failure of these banks, or you hold the executive management teams of these banks responsible for not having proper, a rainy day fund, knowing that it's raining outside.
Look, we know in these
Let people
crises,
get wet,
it's
don't
generally
worry.
more than just one institution. It becomes an industry-wide phenomenon, and when you have these crises, then the Fed, I would argue, is sort of a reason for it because they've raised rates so aggressively, and I'd say imprudently, because monetary policy works with lags. I always keep hearing about
The dollar
inflation
is
side,
up
inflation
and
side.
Bitcoin
It
is up.
coming down.
This is
Granted,
weird.
It's not coming down as fast as we'd like, but if you have a recession, everybody seems to think that we're having one, then it will take care of itself.
Right. But I mean, if everybody sees what's happening, you think that these managements are just getting caught off sides, and you're
I would
supposed
say
to hold them
broadly
harmless. I mean, that's the
no. I'm saying broadly speaking, as Jason I think alluded to, when the Fed moves aggressively, something's going to break. You never know where it is, and to me that is partly a function of the Fed. I mean, the reason we have inflation is partly the Fed, and now they've overcorrected one mistake on another, and they're forgetting their lags in the process, and they could take the economy down with it.
right.
Hey, Steve, Barry Sternlicht writes in, and obviously he's been someone who has been saying for a very long time that the Fed is being too aggressive and should wait and pause. He says that rents are down, not up. He says the CPI is nuts. CPI is headed towards 2%, maybe even negative. Rents were up 20% last year, up 2 to 3% this year. He says that's the most important number in this entire report. You had mentioned that component of shelter is going to be the key that the Fed's watching, too. What about the numbers, what's out there in the market, what the CPI actually picks up?
Hey, Ivan, yep, longer.
Well, Barry is right. The CPI, when it comes to housing, is nuts, but we know it's nuts. So I think that helps a little bit. If it were incorporated now, it would be helpful, but it will be incorporated in the future. I think that's something that the Fed is banking on. Look, what had happened is that Powell broke down inflation into three components: had the goods sector, have the housing sector,
Litecoin is
and the
taken
third
off.
one is core services, ex housing. Goods had been down,
FTM.
and now it's kind of flatlining a bit. And then housing is expected to come down, and it's that other piece that he thinks is driven by wages that has not come down. So we'll see, Becky, whether or not we can get some help in that particular area of inflation, that third one that he believes is wage-driven. That'll be the key to making the call here. I do want to point out one other thing, which is interesting, because Barry kind of reminded me of it. He's in that real estate sector. I had spent time, Becky, the last part of December, first part of January, trying to see if there was systemic risk out there. One of the places I was looking was real estate, corporate bonds, some of the corporate borrowing that was out there. I didn't look at the books of Silicon Valley Bank, which I guess in retrospect I should have been looking at. But I think the cautionary tale here, to Joe's point, is there are other systemic shoes yet to drop, perhaps, in this economy before you get to the issue of a bank that was perhaps very badly managed for its interest rate risk.
That's a fair point. And Dana, that does raise the question about what the Fed's supposed to do here. What should it be more concerned about? You were saying that they're going to have to continue to raise because you think this inflation is very sticky. But the idea of breaking other things along the way, the things we still don't know about, how do you balance that, or how should the Fed balance that?
Well, you could argue that, poor governance was at the core of what happened, certainly over the weekend and with other banks that are quite vulnerable right now. But inflation's a bigger problem for the U.S. economy. You don't want inflation to remain elevated for extended periods of time. You don't want inflation expectations to become unanchored. And the Fed still has that fight. Certainly, we hope that there will not be further cascades of contagion to other banks or certainly to the broader financial markets. And it may take a few weeks to really sort that out. But once we're done.
Okay, so I'm going to hide that for now, and we're going to start taking a look at the markets here because Bitcoin is starting to make a move up. Frankly, we're seeing some weird stuff, guys, because the dollar index went up. It's actually not falling down as much as you think. So I don't know if people are actually pricing in a 25 basis point rate, like no hike or not. You can see Bitcoin is, the overall market is pricing in a 25 basis point. I mean, no hikes for next week. The dollar index isn't really doing that, which is kind of interesting. We're not continuing to plummet as Bitcoin and some of these futures continue to soar. Bitcoin here is breaking above 25,000. If we were to go over here to the weekly chart, you guys can see we're breaking above, and we're breaking above the 200 weekly moving averages right here. Let's go over to the daily. Let's probably plop that resistance level off of here. Let's open the smart money. Let's go to Lux Algo 1. Let's go over here and let's turn that to the weekly. There you go. You can see it right there. We're breaking above it on the 15-minute chart. Maybe that's what this big pop was really to do. Can I see it or no? No, you can see the little dot of a line right there, but it's not going to be nearly enough. I'm going to make my head a little bit larger here as well. There we go. Let's see if I can mess this up a little bit more. 1 minute. Weekly. No, it doesn't work for me. Okay, that's fine. But yeah, so it seems like we also just broke above the 200 here. Guys, I would be so cautious if you guys want to trade this move. We're kind of in this unknown territory where the market really wants to believe that Jerome Powell will not raise interest rates. I would say, if anything, this is a great opportunity for you guys to do some day trading here, because you can see we're still making some relative highs right here. If I was to guess, and this is a big guess here, I'd say we end up closing down below the 200 weekly moving average by the end of the week here. I'd say by Sunday we're back down below it. Not big catastrophic move, but at this point we're kind of in this weird spot because inflation, it wasn't good, it wasn't bad, it was right where it needed to be. And you can see Bitcoin still continuing to rise right now. Shiba's going up. Litecoin is still continuing to go up here. We're seeing a little bit of a squeeze going on. The market at this point is pricing in Jerome Powell not doing a rate hike in a couple weeks. So today is the 14th. Jerome Powell comes out in about a week and 1 day, so next Wednesday, not tomorrow, but the following Wednesday. And people are pricing into the market that he is going to say, hey, we're going to take a pause because the banks are having issues. If he does not have that pause, the market will kind of have a crash for maybe a day or so, and like down to 500 points for the Dow, maybe down 1,000 points for the Dow, but just giving back some of these gains. But I suspect the crazy part about all this now is, you remember how we were talking about Apple, Microsoft, Google, a lot of these plays, like Apple in particular, Nvidia in particular, how they were close to breaking out. If we start going over here to Apple now, and we start to see like what's going to happen with the day, look at this move coming up here, kind of a wiki move, but looking pretty strong, looking fairly strong after the close yesterday. All of a sudden, Apple could have breakout here. Amazon can start breaking back above the 200, or excuse me, the 20 and the 50-day moving averages here. AMD could possibly break out to new highs. Google can make its way back up here to at least this little bit of a hump we've been seeing. Tesla's probably going to have a monster of a day here. But Nvidia, breakout. Again, this irrational rally could probably keep on going. And I want to remind you guys how irrational this is. And that's mostly because, again, we're going to have a recession most likely now because, again, I think I want to articulate this in a clear way, but I want to look at Bitcoin while I do it because Bitcoin's up like 6.5%, almost 7% right now. Definitely soaring right now. So basically, let's go to the second chart, I guess. There you go. What's basically been happening, guys, is this. If we don't raise interest rate hikes next week, that's going to be inflationary. that's going to cause inflation to go back up, okay? Because there's going to be a perceived notion from the market that he's going to be blinking, right? We were talking about blinking before, that he's going to be giving up in the short term battling inflation. And with all this stuff he's been doing to help out the banks, that's been more of quantitative easing. You kind of heard them allude to it a little bit. Quantitative easing, and not quantitative tightening. Quantitative tightening is where they were trimming down their balance sheet, making sure they were trying to fight inflation. All of a sudden, they're not fighting inflation anymore off of the monetary policy. All they have now is rate hikes. That's why it was so drastic, the move they made. So if they don't raise rate hikes, guys, this means inflation may be sticking around for a while, which means even though we might have a nice little rally in the short term, and I would say it might end up being a nice little rally, what comes later on is going to be a lot more painful than we otherwise might have expected. So it almost makes me think if he doesn't raise rates and he blinks and he backs off of this, I might move my prediction from more of a moderate recession to something more of a severe recession. Not a financial crisis type of recession, but where you see unemployment rate probably peaking up around the 6 to 7% instead of just like the 5% I think we were at. I think you could see it get another 2 points up there, because this is going to have consequences if he decides to not actually raise rates. But we'll have to see how all that pans out over the next couple weeks. And will it rally today? Yeah, most likely you're going to see the market have a pretty nice pump off of this news. What does concern me a little bit is the dollar index is still doing okay. The hourly chart, right? We came down a little bit, but we're not necessarily like freaking out like you might think we would. Maybe throughout the rest of the day, if we can see the dollar index come back down here to $1.03 or $1.02, closer to like the lower $3s here, I think you'd feel more confident about the market continuing to move upwards. But at this point, that was a bullish move. The CPI report wasn't good. It wasn't bad. It was just okay. Okay to me means that he's going to be raising interest rates by 25 basis points. To the whole market that we're watching right now, it's symbolizing he's not even going to raise interest rates, and there's a possibility that he's going to do cuts. I am more of a hawk when it comes to inflation, as you guys probably have noticed. But you guys can clearly see that the market is definitely not agreeing with me. They think that there's going to be no rate hike coming on Wednesday, or perhaps even a rate cut, as some of the people in the banks are now calling for. I don't see a rate cut, but I'm much more of the camp that if we stop fighting inflation, inflation is going to start coming back, and you pair that with energy prices continuing to go up, I would say closer to the summertime, that could cause some issues. But in the short term here, let's go over to services inflation. We had a big drop in services inflation, which is kind of confusing. I want to see what is going on. Oh, it re-updated. Oh, services inflation to go down. That's not good. This is rent inflation. How did that turn out? That kept on going up. See, it went from 7.87 to 8.1. See, like, if you actually look into the numbers, it's not good, right? This is PPI. I don't think this comes out until tomorrow. If I reset, yeah, it doesn't come out until tomorrow. Consumer, it went down to 6. Like, there wasn't much good data in this one. But again, remember I told you they were moving stuff in and out so they could change the way the formula was concerned. That formula is helping inflation seem like it's coming down when it's not really coming down in the way you think it is. So again, you look at this. Services inflation didn't go down. Rent went up, right? And we don't know PPI yet. But again, that's where my concern really lies. I'm much more of a nerd about this than I know a lot of you guys are. But this comes out of my inability to trust governmental bureaucracies that tell you the truth. Like, I get all this data, but the main number that everybody wants to report about isn't necessarily the thing that people should be really focusing on. Which is probably why I still believe that Jerome Powell has to increase by another 25 basis points, but the market overall wants to trade it as if we're not going to have a rate hike at all. I mean, I wonder if there's any more data I can look at as far as inflation. Because they said something about used car prices going up. I didn't know that they were having any issues right now, so let me actually take a quick look at that. Used car prices. No, no. Housing. Is it in housing? No home. No. Trade prices. Import. Michigan. No. Producer. No. Rent inflation. Services inflation. Markets. No. Trade government. I don't think it would be in here. I'm not entirely sure. What I can do though is actually just go over here to CPI report for us while Bitcoin is continuing to kind of go up bit by bit. Yeah, here's them saying, hey, we're going to change the way that things are weighted. 314. CPI for all items rises 0.4% in February. Shelters increase, called rent. College tuition fees up, yeah. Okay, stop changing the data. Well, maybe if they change the data, maybe we can trick ourselves into not having a recession. That could always maybe work. Okay, let me zoom in here very fast. Okay, dude, I don't know why I'm freaking singing right now. It must be the tea in my system. But here we go. News release, Bureau of Labor Statistics, U.S. Department of Labor. Transmission of materials in this release is embargoed until 8:30 a.m. Eastern Time, Tuesday, March 14th, 2023. Now, Consumer Price Index February 2023. This may get boring, guys, but this is very, very important, and I kind of want to read this myself. Even though I have not slept in like 20 hours, okay? Mind you. The Consumer Price Index for all urban consumers, CPIU, rose 0.4% in February on a seasonally adjusted basis after increasing 0.5% in January. The U.S. Labor Bureau of Statistics reported today, over the last 12 months, all items indexed increased 6% before seasonal adjustment. The index for shelter was the largest contributor to the monthly all items increase, accounting for over 70% of the increase, with the indexes for food, recreation, and household furnishings and operations also contributing. Well, yeah, food, recreation, and house, that's a lot of the stuff that we live off of, guys. The food index increased 0.4% over the month, with the food at home index rising 0.3%. The energy index decreased 0.6% over the month as the natural gas and fuel oil indexes both declined. That's good. The index for all items less food and energy rose 0.5%, in February after rising 0.4% in January. Categories which increased in February include shelter, recreation, household furnishings, and operations, and airline fares. The index used for used cars and trucks and the index for medical care were among those that decreased over the month. The all-item index increased 6% for the last 12 months ending in February. This was the smallest 12-month increase since the period ending September 2021. The all-items less food and energy index rose 5.5% over the last 12 months, its smallest 12-month increase since December 2021. The energy index increased 5.2% for the last 12 months ending in February, and the food index increased 9.5% over the last year. Food is getting expensive here, boys. And this chart is 1 month percentage chart in CPI for all urban consumers, seasonally adjusted February 2022 to February 2023. And you guys can see we are up. This is not good. We are still up. Now, the second chart here, 12-month percentage change in CPI for all urban consumers, not seasonally adjusted February 2023. And what does this mean? All items, less seasoned food. Let's see. So we're going up by not as much, and that is a good thing. We're going up, but just not as much. Table A, percentage changes in CPI for all urban consumers. And we want to look at this one over here on the right-hand side of the screen, so I'm going to zoom in here. Let's just say one more time. There we go. So all items up 6. That's the number we saw today. Over here, food, 9.5%. Food at home, 10%. Food away from home, I assume this means restaurants, 8.4%. Energy, 5.2%. Energy commodities, that's gasoline, it looks like. That came down. That's good. So gas got a little bit cheaper. Fuel oil, 9.2%. Oh, wow. Wait. Okay, it says 1, not seasonally adjusted. Okay, not seasonally adjusted. Energy services, 13%. Whoa. Services, wow. Electricity up 12.9. Utility piped gas services up 14.3. Jesus. Commodities, less food and energy. We have 1 here. That's good. New vehicles. This is what we're looking for. New vehicles, 5.8%. So new vehicles are getting more expensive. Used vehicles are getting much cheaper. Apparel, 3.3. Medical care commodities, 3.2. Services, less energies, 7.3. Shelter, 8.1. Transportation services, 14.6. Whoa, maybe that means like taxis and Ubers and buses and stuff getting much more expensive. And Medicare services, 2.1%. That kind of breaks it down too. The food index increased 0.4% in February, and the food at home index rose 0.3% over the month. 5 of the 6 major grocery store food group indexes increased over the month. The index for non-alcoholic beverages increased 1% in February after a 0.4% increase the previous month. The indexes for the other food at home and for cereals and bakery products each rose 0.3%. I was just talking about cereals over the month, excuse me. The index for fruits and vegetables increased 0.2% in February, and the index for dairy and related products rose by 0.1%. In contrast, the meats, poultry, fish, and eggs index fell 0.1% over the month, the first decrease in that index since December 2021. The index for eggs fell 6.7% in February, following a sharp increases in recent months. So the decrease in eggs really was the turning point as far as that was concerned. Now, the food away from home index rose 0.6% in February as it did in January. The index for limited service meals increased 0.7% over the month, and the index for full services meals increased 0.6%. The food at home index rose 10.2% over the last 12 months. The index for cereals and bakery products rose 14.6% over the 12 months ending in February. The remaining grocery store food groups posted an increase ranging from 5.3% fruits and vegetables to 12.4% other food at home, okay? Now, we don't have to go through all of this. I want to see if we have one more chart. Is that it? Technical note. No. Sampling error possibilities. Let's see. Anything else here? I think this is it. Okay, there you go. I think that, oh, here you go. Wait, so table 1, consumer price index for all consumers, U.S. city average by expenditure. Wait a second. Wait, what is this? U.S. city average. So what's the, okay, this is city average here. That's, shows everything going up here. Oh, by detailed expenditure category. By detailed February. What am I missing here? This is all table 2. Is there anything else here that I need to focus on? Yeah. Continued. They really go into details. I mean, men's footwear, So, okay, we can go into detail here just very fast to see what's really, like, the big thing here. I'm just going to look for something that's over, like, 5%, though. So this is going to move pretty fast. My eyes can keep up with it if yours can. Awesome. That's down a lot. Men's suits, sport coats, and outerwear is dropping like rocks. Men's pants. Women's dresses are getting more expensive. Oh, women, they're getting you. They're scamming you, so don't buy dresses right now. It's all fake inflation. Or it's inflation, but, dresses always cost more than men's stuff. But they're getting you pretty soon. What's going down here? Sewing machines, fabric, and supplies. Nobody's stuck at home anymore. I totally understand that. Smartphones are going down. Anything else really going up, though? That's my thing. Like, what's driving some of these prices here? Up 6.4%. Airline fares. Yeah, damn airlines. Let's see. 2, 4. Not much there. Everything, a lot of stuff is going up bit by bit here, but it's not like there's a crazy amount of it. Okay, now we're done with that. Okay, so we didn't see too much as far as what was making everything really jump. Seattle. Oh, what is this? February, December. So what's Seattle look like right now then? Seattle, Tacoma, Bellevue, that's my area, 8 point, but that wasn't that. So They're not keeping track of it, I guess. They're only keeping track of some cities at certain times. West, South, Midwest, and Northeast. I guess that's an easy way to do it. This is from December 2022, though. Pricing schedule. We don't have anything from 2023. So this is kind of old news. They're probably not going to change this for a while here. But I guess from December 2022, right? February 23. Oh, February. Okay, so January 2023. I guess this is the best we can go off of here. Seems like the no, the South is getting hit. East, South, Central. I don't even know what that is. Okay, I'm not even going to try to understand how big this country is. Anything else here? No. Clocks, no. All right, there's a lot of residential yeah, there's a whole bunch of crap in here I don't really care about. Oh gosh, and I have to correct everything here as well. What is this? Relative importance of January. Oh, commodities. That's kind of important. Commodities less food. Housing, yeah, housing, of course, that's weighted heavily. Okay, Bitcoin's still going up here bit by bit, everybody. But yeah, so there's a lot of problems with the CPI report, but I'm guessing the way the market is perceiving this at this point in time, with Bitcoin up 9% on the day, up $26,000, it's perceiving that there's going to be no rate hike next Wednesday when Jerome Powell comes out. If there is a rate hike during that time, I would assume that we're most likely going to have a pretty drastic dip. But until that happens, oops, sorry guys, my leg's about to cramp. Until that happens, we're kind of in a green light right now as we just broke above the 200 on the weekly chart. We're going to try to keep going higher. That next level of resistance, it's right around here where we currently are, 26,659. That's the next level of resistance for us at this point when it comes to Bitcoin, right? So let's go back over here. Had the breakout. I don't know if I can have the order blocks right here. Oh yeah, the order block got taken out, so we're no longer talking about it. And look at that, Jesus! You guys saw we were talking about the change of character here, and I was like, I don't want to trade it because of CPI data. If you guys believed in CPI data, that's a great profit opportunity right there. So far this thing has been working like a freaking charm. Oh, and now we have a larger change of character here after breaking out. Oh gosh. So I mean, guys, Bitcoin has the opportunity to go up to like $30,000 now. To be frank, am I going to be trying to trade all that momentum? No. Again, guys, I'm just so bearish overall. Like, we have this was like. There's a scene in the movie World War Z where this woman is like, her hand is bitten by a zombie. Though within a fraction of a second, Brad Pitt comes out of there with, I don't know, this is my boar's head brush, but he comes out of nowhere and slices her hand off so she doesn't get infected all the way through her. We're like, I see us as just slicing our hand off. We're kind of in some pain, but we're so happy that we're not going to turn into a zombie. I think that's what's kind of happening right now. But since it is happening right now, we got to find the silver lining here and say, hey, we're breaking out. Our next level of resistance happens to be right around here of 26,700. And again, that's the lows we saw after the Celsius first crash that happened over here. I think this was a Celsius crash. Or this might have been the Celsius crash. It could have been Celsius, Voyager, BlockFi. There was a lot of crashes during this time. But these are the lows right here. So if I put a magnet right there, $26,700 even is going to be a pretty good opportunity, I think, for a lot of people to short. And I think it may be an opportunity for people to short just because Bitcoin's been rallying the last few days without the stock market. So as we look at the Bitcoin over here, look at the last 1, 2, 3, 4 days as we kind of bounced off of this 200 daily moving average. What was the Dow Jones doing? That. What was the NASDAQ doing? That, right? So, what was the SPY doing? That, right? So, I would say that, we can see the SPY bounce off of here, the NASDAQ to bounce off of these levels. I don't even like the NASDAQ right now, but it'll bounce regardless. I'd say you have some opportunities. Day trading options is probably what I'd prefer to do. I'm not going to be trading today, though, because I haven't gotten any sleep in like 24 hours, so I'm not in the right mindset to be trading. But, you can see everything trying to catch up right now. Let's go to the 15-minute chart. Let's go to auto. So this is Ethereum breaking out 1,700. We had just talked about how I think this thing can get up to 1,800. It's not there yet, but it peaked at 1,764. So we're on our way there right now. Dollar index having a short-term reversal right now. Again, interesting that we're kind of seeing this not capitulate as much as you might think based off of all the hype going around the markets. Matic bouncing up, Dogecoin bouncing up, XRP's on the verge of a breakout here after all is said and done. Link making a move, STMX. I mean, you know, Sheep, everything's making some really nice moves. Litecoin, Ethereum Classic. You're seeing big moves across the board right now, and that's really good. But just be careful with it. FTM is up a lot. If I was to short something, it'd be FTM, but when Bitcoin hits that $26,700 level. 1 minute chart. I'm hoping that, what do we got, like 20 minutes until the market opens? I would hope that we can try to break above this before the market opens. May give us a little more of a boost. So like we break out, then the market opens, and we continue that push on TV through the rest of the day. But this is a pretty seismic move, everybody. Everybody is officially, at least from my perspective, the market is pricing in the fact that they don't think Jerome Powell is going to be raising interest rates, okay? I think that's the real solid thing you guys have to understand going forward today. And hey, Corinda, have a very, very good morning. And hey, Fat Buddha, happy to see you back. Transportation plus 14%, yep. Gas and utilities plus 14, electricity plus 12, food and home 10, yep. Food away from home 8.4, yep. Shelter 8.1, yep. Overall 6, new cars 5.8. It's when you look at it, it's so bad, and then you kind of see how the news is portraying it as being good, and you can understand why they're saying it's good. But at the same time, again, my leg's about to cramp up. Again, I have been sitting down and working all night. I have not been actually sleeping like a good person should. But again, we're like in that chop off hand moment where like our hand is on the ground. It's kind of just like there, but we're not going to turn into a zombie. So it's like really bad, but it could be worse. Remember? One of the people when we were watching CBC said like, it's so bad, but at least we know it's bad, so that's good. Right? So not about the CPI, but about something else is related to inflation. And I think that's kind of where our mentality is at, and why at this point I'm day trading, I'm dollar cost averaging, but am I thinking that this bull market has started, this bear market's over? No way in hell. There's no way do I think, am I going to go like bull markets here, time to buy. I'm still not doing it. You guys formulate your own plans, though. Don't just listen to me. Go listen to like friends of mine like Tom Crown, other people out there. Hear all those. Hear a lot of opinions and make your own. Used car prices were skyrocketing last year. I sold mine for more than I paid. You're probably not the only one. I saw a lot of people trading in their cars or selling their used cars for a huge whopping profit. And hey, Mo, so nice. Wake up. I take some profits now. Take some profits. Scale out. If you want to hold on a little bit longer, definitely go for it. Most people are probably just going to wait for that first sign of weakness here. It might happen before the market opens. Who knows? But I would say we would just want to keep on these higher lows right here, right? Low, higher lows, higher lows, higher lows, higher lows. If you guys are doing your basic Fibonacci's off of this kind of violence move, it's going to look pretty interesting. Oops, I want the extension. Let me just go over here. What is that? There we go. What are we looking at right now? That's not even. This isn't even. We're too volatile for the Fibonacci's right now. Did I do anything? No, not really. We're just too damn volatile. I guess I would have to pull this back to maybe the 5-minute chart, hourly chart. There. No. Right there, yeah, wait for a second. We're as high as we're gonna go here, so I don't have to use that. I guess I could always, what's a good one that we can use? 4-hour chart. We'll go over here. I don't really like the way this looks, but it'll have to do. Yeah, there we are. Yeah, of course it is. Of course it is. All right. Yeah, we're getting our first little hiccup here. That's fine. After this last move, again, the goal right now is just to break above 26,700. The closer I think we get above that level, though, the closer we're going to have, the more of an opportunity we're going to have some shorts enter into the market. Again, Bitcoin in the last few days is up. Oh, geez, I don't even want to think about this. Up around 33%. That is absolutely insane here. Definitely a great trading opportunity. Dollar cost averaging is still a go. Dollar cost averaging, guys, is still going to make sure you guys have some exposure here for your long-term assets. Short-term wise, day trading is just all I'm going to do. Just day trade, and enjoy the little profits that come streaming in here. And then there you go, 26,700. I want to see if we can break that. And hey, Usman, let's go. There we go. So we learned everything is still expensive. Hey, Ivan. Yes, but we learned that we're kind of in denial about it at the same time. So we're in a good spot, everybody. You know, it is what it is at this point. Remember, guys, most people don't go into the data, so most people don't understand that. Most people out there, you know, and whether you're in rural America or downtown Seattle or, you know, downtown Portland, San Francisco, Louisiana, Montana, North Dakota, South Dakota, Philadelphia, wherever you guys are at, we all still feel that things are expensive and things are still kind of getting more expensive. We all feel it, but not many people will actually go into the data and say, whoa, this is not good. Rent is getting that crazy? Oh, well, you feel it. You do know rent is crazy. But how many people are honestly looking for new apartments every single month? Not many, right? So they're not open to that all too much. And that's why when we go over here and we're like, services inflation, that's stagnated. That's good that's stagnated, but we're still like not going down. We're not going down. Rent inflation, that kept going up. That's not good at all. We're not even slowing down as far as rent. And it takes a long time to build houses. It takes a long time to build apartment buildings. And even if they build those apartment buildings, are they really going to be cheaper? I mean, are they? I don't think so. Like here, newest apartment building, Seattle. Apartment guide, newly constructed apartments. So 6 units available. This is in right here. This is not even in downtown. It's up here somewhere at Northgate. Okay, let's go this one. So newly constructed. Oh, it's all call. Doesn't even say the prices. Okay, here we go. So this is a 2D floor plan, 3 available. It is a 1 bedroom, 1 bath. For 600 square feet, you're paying $1,900 a month. $1,900 a month for 1 bedroom, 1 bath. This is a new building. Does that seem like that's going to be the thing that lowers your inflation? No, right? I mean, we're not going to spend too much time on rent because you guys know I can get caught in those rabbit holes. But inflation's going to be sticky. That's just the way it is. And eventually, we're probably going to go into recession. But the timing of the recession is going to keep on changing. If remember before this last week, we were quantitative tightening. We were fighting inflation from a monetary standpoint by raising interest rates. Now all of a sudden, are we going to be really raising interest rates anymore? Who knows? Are we quantitative tightening anymore? No, we're quantitative easing to help out the banks. So we're helping inflation at this point. We're not attacking inflation nearly as strong as we once were as of last week because of the quantitative easing going on. But if we stop raising rates, that's where things get a little bit more messy as far as inflation down the road, okay? Down the road. We'll have to see how much worse things get, but it's not going to look... The economy is not looking prettier, but inflation is... the market's looking prettier, but the economy is looking worse. It's so stupid to have to say it like that, but that's pretty much it. And we got our first change of character here for you scalpers out there, breaking down below the 20 here. 5-minute chart's probably going to act up here, and you just don't want to break down below 25,790 or so. But I think that's because we have like 18 minutes until the market opens up. Let me see very fast. Double check CNBC to make sure anything's happening. Oh! Look at this. Hold on. Meta to lay off 10,000 employees, close 5,000 open roles. So we still got... The economy's still not good. Frank, again, yeah. Yeah.
Have here on his deposits versus what do you got here on his held to maturity?
I think we're going to 28K.
Oh, First National Bank of Zuckerberg.
It would happen over the next few days. It wouldn't happen today. Happen over the next few days. PPI comes up tomorrow. That could be another big boost for Bitcoin.
We didn't mention NVIDIA.
Oh, I forgot. I talked about Western Alliance Bank. I'm sorry.
He wants everybody in person, Jim.
Well.
Okay. Yeah, not too important what they're talking about right now as far as getting back to work. But yeah, so you guys are seeing that there's still some real issues in the economy, but hopefully people can enjoy this move, make some money off of it, do some trades. We're currently on a short-term shorting level, like I told you guys before, but in about 10 minutes, you guys are going to see the market open, and the market seems like it wants to have a strong, robust opening here today. We'll see. If you guys go over here to your apples and stuff, right? Still up from as far as yesterday. We'll see if we continue to go up even higher. Your Amazon's up higher than from yesterday. AMD up higher from yesterday. Google up higher from yesterday. Everything is on the verge of opening strong for the morning. What you guys want to see is the market continue to move up higher and higher and higher here. And one of the things pushing this as well is the fact that banks that fell down like 16, 20, 30, 40% yesterday, they're all pumping up like 10, 15, 20, 30% off of yesterday's lows that they suffered, okay? So you're going to see a lot of crazy moves happen right here. Hopefully you guys are prepared for this. Have some fun trading. Do your best, but at the same time, guys, I'm still long-term bearish here for the next few quarters. Even with all this, I'm going to trade it. I'm doing my dollar cost averaging, but I still believe, based off of all this information, we are still going to break down to new lows as far as Bitcoin later on this year. I think the move is probably just going to be very drastic when it occurs because something else is going to be forced to break. Because if we do take a break from fighting inflation, inflation is going to get stronger, which means we have to use more rate hikes to fix it. And we're probably going to have a potential Volcker moment here if Jerome Powell decides to back down from fighting inflation in order to protect banks and other institutions that he feels like maybe in a precarious situation. Even though he's pretty much made FDI insurance cover all deposits, and now he's doing quantitative easing instead of quantitative tightening. If he does the extra capitulation to the market, I mean, my gosh, guys, I really don't know how this is all going to end, but it just seems like we're on a cliff. We're holding ourselves up. We have a really strong grip, but at the same time, we're also looking at an ant on the vine with a micro what do you call those things? Microglass, whatever you call it. Jeez, I'm not a kid anymore, but what do you call it? Spyglass, whatever. And we're slowly like lasering the sunlight into it because we're focusing on the ant just so much. The ant is basically just, I don't even know. I'm too tired. I haven't slept in like 24 hours. There's some symbolism there. You guys don't have to understand it, but it's in my personal head. You guys will understand it, okay? So I'm going to call it a day here. I'm going to go to sleep. Bitcoin's up 7.5% right now. It is doing very, very good. It's facing a little bit of a drop down right now. That's fine. The dollar index is going more sideways here, which is a little bit more concerning. If the dollar index tries to reverse sometime today, after having this like okay inflation report, you're going to see the stock market actually go from positive to negative, and Bitcoin probably just go back down below 25,000, but probably not have a huge tank of a move down. I won't know because I'll be sleeping, okay? So, magnifying glass, thank you, Zachary, so much. Thank you very much. But I will see you guys later on tomorrow probably. If I get enough sleep today, I will be live later on tonight. But guys, relax. Don't force yourself to trade if you guys don't want to. But understand, we're in a pretty interesting spot. We're most likely going to see some shorts try to attack us as we approach 26,700. That next level that you guys might want to be buying at is going to be the breakout of 26,700 because if I go over here to the weekly chart, that's the lows from over here and we'll be having some issues, okay? So, have a good night. Oh, Jesus. Have a good day, everybody, and I'll see you guys.